Expand CFO.
Is your controller quietly dragging your business down and you don't even realize it yet? Because here's the truth. A controller can either protect your growth or be the reason it stalls. A bad controller doesn't just mean messy spreadsheets. It means missed deadlines, damaged vendor relationships, confused investors, and a leadership team that's basically flying blind. And the worst part, most CEOs don't realize how bad it's gotten until they're in a full-blown fire drill. So let's walk through the 6 biggest red flags that signal it's time to make a change. 1, they're reactive, not proactive. You don't hear about problems early. You hear about them after they explode. Cash gets tight. You find out when payroll's stressful. A customer stops paying. You find out after it becomes a write-off. Expenses are creeping up. Only after the month is already over. A great controller doesn't just report history. They spot issues early, raise their hand fast, and give you options before it turns into a crisis. 2nd red flag, they can't explain anything in plain English. You shouldn't need a finance dictionary to run your own business. If every conversation sounds like, well, it's a timing issue with accrued liabilities and a deferred revenue recognition, no, just stop. A strong controller can translate your numbers into real-world language, like margins dropped because freight costs rose 12%. Cash is tight because inventory is turning slower than last quarter. If we hire now, we'll need an extra $200,000 cushion by May. If you leave every finance meeting more confused than when you started, that's a problem. Red flag 3, they don't understand your industry or your systems. This one's huge, especially if you're running something like NetSuite. If you're paying for automation and your controller is still doing everything manually, that's not being careful. That's expensive. A controller should understand how your revenue actually works, what your cost drivers are, how your systems are designed to scale, and how to use tools like NetSuite to make your close faster and cleaner. Because if they don't know the systems, they can't build a finance function that grows with you. They'll just keep patching things together with spreadsheets. Red flag number 4. They believe all debt is bad. This one's simple. All debt is not bad. It really is that simple. Yes, you want to show investors and stakeholders that you're stable. Yes, you want strong cash flow. But if you're reinvesting to grow, being short-term in debt isn't automatically a crisis. Sometimes it's the smartest move you can make. A controller who panics anytime you're not cash positive is not thinking strategically. They're thinking defensively. And defensive finance kills growth. Red flag number 5. No insight, just output. Some controllers are great at producing reports. You get a clean P&L, you get a balance sheet, maybe even a cash flow statement. But nothing gets easier. No clear recommendations, no decision-making support, no real narrative behind what's happening. If their main contribution is pinching the bottom line, you don't have a controller, you have a scorekeeper. What you need is someone who says, here's what changed, here's why, here's what to do next. Red flag number 6, burnout and turnover in the finance team. And here's one a lot of CEOs feel in their gut. If finance feels like an HR headache, if it feels like you can't even keep track of who's even doing your bookkeeping anymore, if people keep quitting, work keeps getting dropped, and you're constantly training new people, that usually isn't a bad luck hiring streak. It's a leadership problem inside finance, and your controller is losing control of their team. For example, we worked with a 30 million manufacturer whose controller sent out monthly financials 25 days after month end. Everything was stuck in output mode, and the monthly reporting cycle was never ending. Numbers were late, decisions were delayed, and the CEO couldn't see what was coming next. After replacing them with our fractional controller services, monthly close dropped to 5 days, and the CEO finally had forward-looking dashboards. That business doubled in 18 months. They were doing all the right things. They just didn't have timely reporting to reinforce it with their in-house controller. If any of these red flags hit close to home, it's time you hire a controller built for growth, not just survival. At Expand CFO, we can replace your in-house controller and let you focus on what truly matters, growing your business. Click the link below to schedule a free chat with us.
Expand CFO.